With me today, I have Mr. Timothy Reiser, our immediate past chair, uh, together with whom I hope we have worked out our technical difficulties. Tim, can you hear me?
I can hear you perfectly.
Fantastic, and we've already confirmed that those listening in have audio, so we're going to go ahead and keep the show rolling. You should be able to see on your screen the shared presentation materials that we've put together. But our thought here is that we would present some basic information about the Paycheck Protection Program and afford our listeners an opportunity to chime in with questions. So if there comes a point in time, we want this to be as interactive as possible, but if there comes a point in time when you have a question, I would ask that you consider using the chat possibility and sending a question through that chat. Also, I've got some questions that had been sent to us ahead of time. And with that, I will go ahead and see if I can't advance our screen here so that you can see some additional information. So the basics, payroll protection program, something that we've all seen, we've all heard about. If you're on the line, you've heard enough to know that there's some potential here for you, and there's some money out there available for small businesses. We hope to be able to assist any that might still be interested and able to get some money out of the program as it stands now. The basic loan, as the name suggests, based on payroll, but it's not the only thing that you'll be able to take out the money for. There's loan forgiveness involved, and I think a lot of people have heard about that, so we're hoping to talk to you a little bit about that and answer questions about that, as long as you're retaining workers and rehiring those laid off. It's open to wide open, any industry. I put there even law firms and hedge funds, because I laughed when I read in an article this morning that even law firms are capable of getting the money. But couple tests that you'll need to be concerned about: what's been referred to as a 75-25% test, and the high paid employee limit for forgiveness calculations. Tim, the loan itself, the program itself, I should say, awful lot of money available and a lot of loans approved, with apparently some more money on the way. But main concern, news coming out this weekend, was that there may not be any money left available. I was hoping perhaps you could maybe get us started by addressing what that might mean for everyone. The fact that they've already given as much of the money away with the loans that they've already had.
Yeah, so for starters, they have used up all the money, and all the money's been committed to. However, there's a lot that has not been committed to, but the paperwork has already been sent, but they had run out of money, so they didn't assign them actual in line. So you still want to quickly get in, and so the sooner you do that, the better. There is another launch of another $250 or more billion, which is anticipated being identified and ratified this afternoon at 2, from what my bankers tell me, but who knows for sure when that actually happens. It's a congressional issue. But you'll still want to get involved and get your money in there. And whether there's even a second round, or whether they're even giving a second option on it, I'm just assuming most of it will be just a continuation of what there has been in the initial PPP program. I actually closed our loan on ours this morning at 10 o'clock. So, and the bank said they'd only had two. The banker said he'd only done two already. So we got in fairly early to have it, and I have the documents that we all had to sign, so I know what those documents are involved in. But I've talked to many people who said, I didn't get mine. Where did all the money go? And a lot of that went to bigger businesses that were not anticipated to participate in this, but were able to work out that they were. And that took all the big money out, so most of the smaller people got left behind, at least for the time being.
Well, if we could talk about and frankly just break down the basics of what the process itself might entail for those who haven't yet applied, but it's looking like the funds might be available. I imagine the biggest hesitation is often going to be literally just applying for a loan and not knowing what might be required of them. The application itself, both Tim and I have been through it. Tim with his organization, and myself with an organization for whom I serve on a board. But talk about how simple the process itself is, Tim, in terms of the information that a lender, or get us started, I guess, if you would, about the information that a lender might need.
So it's remarkably simple. It's so scary, remarkably simple. But basically what they want to do is they want to see your payroll records for one of two choices, either January to June in 2019, and they want to see those payroll records so they can figure out what the average payroll is during that time frame. And then you can include with it their benefits and perks, such as insurance and the corporate payroll tax portion, the piece that we're putting forth together as well. So everything's included, except, as Tom indicated, there's a limitation on how you calculate any employee who's paid more than $100,000 a year. Anything over $100,000 a year can't be counted. So effectively what that means is if you have somebody who's being paid $200,000 a year, you calculate the first $100,000 of that income into it, including your own, into that payroll calculation. And then you'd multiply that, get an average number, multiply it times 2.5. That's 2 months and 2.5 months. However, you only have to pay out 2 times for payroll itself. The other half is actually for things like rent and utility bills and things like that. So they're going to look to see if you, in fact, spent 75% of the money back onto either keeping the existing people you have or hiring them back if you've let them go. But I will tell you, there are many, many, many details that are not here and not available, and nobody knows how they will ultimately be calculated or what their relevance will be. So you really can't tell for sure.
So Tim, I'm actually sharing on the screen now. Hopefully everyone can see. Good, I'm glad you can. That the actual Paycheck Protection Program form, which I think at least touches upon what you were talking about, multiplier of your payroll information. But you and I have talked obviously about this separately. And have you, I'll throw it out as a softball. Have you ever seen a loan application form this simplistic by its nature?
No. And what's funny was, so I had to go in this morning, to sign the actual documents. And they told me there were going to be lots of documents for me to sign. And I asked for them to be sent to me ahead of time so I could actually know what I was really looking at, and before I'm going to sign papers. They didn't. But when I got there, I could scan through them, and there was no more additional information in any of those documents either. It was just boilerplate letter like, do I have the ability to indebt the company? Who am I? As the board agreed to this, that, the other, all the general language, but none of the specifics of what was involved. And that was surprising. But when I asked for those details and things like that from the banker, he said, and we were saying, how close is it going to be monitored? The basic answer was, they anticipate, everybody at the bank anticipates wholesale, financial forgiveness on this. So it's very, very simple. It's an easy form to fill out. There's not much into it. Put everything you can on there. In other words, just take the payroll. It's on that first, one of the first lines, average monthly payroll. You put that in, multiply it times 2.5. There is also the ability to add in the economic injury disaster relief money. I think it's capped at like $10,000 or $12,000. It's not a whole lot. You put the total request in there, number of employees, and then you put whoever owns the company, and that's pretty much it.
Well, if I could, let me stop you there. The disaster relief money, it's a separate loan program, right, through the SBA, the Small Business Administration, separate loan requirements, and my understanding was a separate loan application. But the fact that the calculus that is here calls for the EIDL amount, was that something that you covered, or are able to sort of differentiate for our listeners?
I honestly didn't file that portion of it because of the small amount of the cap on that, and so I didn't really bother to get that plan down. So I don't really want to opine too much on that one and how it comes in here. But if you follow,
let me clarify, if I could, not so much that what it would take or go into for that plan, but how or why would that number impact the number here? I guess is what I was saying.
Well, so right offhand, if you take your monthly average monthly payroll and multiply that times 2.5, that's one number. And then if you'll note in there, it says plus EIDL net of advance. So you might have already had a small business loan, already. But if you hadn't had it as advance, you could then add that to it. But there is, on this form, I don't believe the request for that EIDL money is there. So I think you're combining another form to get it. And then you say, here's the whole application amount.
All right, and then now the loan itself, the application itself, is followed merely by a series of yes or no questions. It's really only 8 questions, and then followed by a few sections where you check the box and sign your name. Is there truly nothing more to it than that in terms of getting your application in with the bank?
There's more to it than that in the fact, but not through the program itself. The next piece of that is having that relationship with the bank and getting yourself in the queue. So the first question is, okay, who do you normally bank with? That banking entity needs to sort of have a history of being with you. So it knows you're an existing business. It knows it's dealt with you for a number of years. And therefore that banker is going to say, yeah, okay, I can see these people. They've been operating this business for a long time. I can see the in and out flows. I'm comfortable with this company, versus somebody just fictitiously creating a company and saying, yeah, I'm XYZ company, give me $500,000, here's my payroll. So that's why the bankers are involved in it. So the challenge is the form itself is very, very simple, but you need to contact your banker. You need to have a relationship enough with them such that they're going to call you back. They're going to say, okay, yep, here's what we need. Yes, I got your forms. Yes, I got the pieces in here. And yes, I'm going to apply it. Yes, you're now on the list. Yes, you don't have to do anything more. You're good to go. And the bankers have been telling me that they've been working 7 days a week, 12 hours a day, trying to get all this stuff through. And, if you weren't in that group, it's because they didn't have all that stuff worked out with you. So trying to find a new banker all of a sudden at the last minute is going to be very difficult. So you want to work with at least who you are. In general, there are a couple exceptions, which is that Wells Fargo has been in and out of some difficulty with the feds on this, so they were capped a little bit. I know it's been released, but they're a little sketchier. And so far, Bank of America, from everybody I've talked to, says has been very, very difficult, except for only their biggest type clients. So just keep those in mind.
Tim, offline, we were presented with questions from some of our smallest businesses,
right.
one person, two person operations, and perhaps you can either confirm or affirm that we've got some dog walking businesses, for instances, that have concern.
Right.
Can they apply for these funds as well?
They can. But it's set up for such that it's able to be used by gig workers as well, which means people who don't have your typical jobs or typical stuff. You might have your own LLC for it. You might have some other mechanism that you're keeping it. It might be you might be an S corp. You might be an LLC in terms of but it is through some sort of a business application. So. But even if it's just your own income, and if only you're the only employee, you can still work it through this program. You just got to show the documents and records for it.
So I'm going to take the application off the screen now and take us back to the PowerPoint material here. The breaking it down, back to the breaking it down portion, I had noted both the application, the ease of the application, and we just showed it is truly just those 2 pages that one would fill out, be able to essentially affirm certain things after providing very minimal information, use of the funds, and assuring forgiveness. It's a payroll protection plan, but what limitations, if any, are there on how one can use these funds, at least in keeping with the application itself and what one is affirming to the federal government that you would be doing with the money?
Okay, so again, 75% of the total money is to be used for payroll. Either you need to bring your employees, you either continue to pay your employees or you need to bring them back by June 30th. The money, however, is technically supposed to be used during an 8-week period from the moment you get it. So they only provided, and you probably can't see this, but they only provided a single page of the loan forgiveness under the payroll protection program. And basically all it says is you must use a loan only for payroll costs, interest on mortgage, rent, and utilities permitted on the loan PPP loan program, and at least 75% of the forgiven amount must be used for payroll. The second, you must use your loan only for costs incurred within the 8-week period following your receipt of the loan. Third, you must use your loan only for payments. That's kind of the same thing. You use your loan payments for all during the 8-week period. So in other words, whether it's the payroll or your mortgages, all whatever, it's all within an 8-week period. You must maintain or quickly rehire employees and maintain salary levels. Forgiveness will be reduced if full-time headcount declines or if salaries or wages decrease. And I think it's if it decreases below 25%. You must maintain proper documentation on costs incurred and payments made, and you must submit an application for the lender servicing your loan, certifying and documenting the amount of forgiveness. And you must otherwise qualify forgiveness. And that's it. And that's sparse details and very, very generalized stuff. And it would be hard pressed for anybody to really go through and because there's so many different variations in here that it's hard pressed for anybody to really go through this unless it's really fraudulent for that to be checked and be caught.
And not that there won't be an opportunity, a substantial opportunity for fraud because of how wide open this is. But if I heard you running through those items quickly, really when it comes down to it is you have to make certifications to a lender that you're going to be using these funds consistent with what we're laying out here are the bases for the program, right? I'm in business. I've got employees, or I'm going to bring them back. I'm going to use this money for payroll. And that 75-25, if I heard you correctly, is I'm going to use at least 3/4 of this loan money towards payroll, even if I use some of the money for these additional things that I'm okay to use it with. Is that much right?
Yes.
And merely by certifying to that, you put yourself out there in terms of being an applicant worthy of being approved. There is not supposed to be any other requirements imposed, right, beyond those. You pointed out the existing relationship merely helps the lender in advance on behalf of the government really establish somewhat the validity of the certifications, right?
Correct.
So with that, then, to the extent there are additional expenses that you're apologize for that. To the extent there are additional expenses beyond payroll for which it can be used, you may be limited, as you say, with regard to the forgiveness portion. But have you heard anything or seen anything, or even in closing with with the lender as you went through it, regarding use of the funds for these other approved purposes if there's an understanding that the forgiveness might be waived?
So it's funny that we had a rather robust discussion about the money and the use and some of the perversity of the program itself. So as an example, what if you, like in many places, and I talk to them, the volume of business is going to be lower now, and therefore your need for the employees is going to be reduced. So is the program really want me to hire people that I don't ever really need back? Because let's suppose you had you had 10 staff members, and let's suppose you say, I in the new normal, I'm gonna only need 7 of those. Do I need to bring back all 10 to pay them for 8 weeks and then just fire them again? And or do I just turn around and just not meet the requirement, i.e. I pay out the money, but I'm short. In other words, I've been paid $100,000 to pay these people, and I'm only using 70 or 80,000 of it, and now I'm overfunded. And the answer is, the banker's answer was, well, Tim, at the worst case, you just, okay, you used, 70, you got 50,000 left over, you just give the 50,000 back. He goes, but at the best case scenario, it's just all forgiven.
So focus, if you would, one of the questions that came in was on this $100,000 high-paid employee restriction.
Yep. Mm-hmm.
I think that's probably, of all the questions and concerns I've heard raised, the one where the most either misunderstanding exists or just lack of understanding exists. What is that $100,000 threshold?
So one is that the idea was to help, regular employees. And if you're making $100,000 a year, okay, you don't need help beyond that. But this still allows you can count each employee up to $100,000 in establishing your baseline average payroll. Even if it's more, the excess over the 100,000 doesn't count. And I had 5 or 6 employees were in that category. And so then the next piece of it was when you get paid and you're paying people and they're on payroll, even if I'm paying them the 150 or 200,000, whatever the number is, I'm only get to count again the 100,000 of it, their first 100,000, to meet that 75-25 case test. So either way, the idea is, hey, if you made more than that, well, we're not helping you, and you don't get to count that part of it.
Well, but I want to be clear, because I think that's where, and I don't know, maybe that answers it for a lot of people, but the question that I found, the sort of drilling it down part, was, what if you do have that employee who is a high paid employee? My understanding that's been conveyed to me as questions have been asked is that you can have an employee who would be paid $150,000, for instance, or $100,001, and bring them back and have them still count towards your ability to forgive the loan money, right?
Yes.
But it's only the portion of their salary that's going to count in your numbers.
Only up to the 100,000.
So you have 10 employees, right, at 100,000, let's say 110,000 each. You get $1 million loan, and you can use $1 million to repay or cover all 10 of those employees' salaries.
Okay, well, yeah, I don't know about the
Right,
numbers.
so $1 million, well, $1 million worth of borrowing for what amounts to $1.1 million worth of payroll.
Again, when I calculate the loan I can qualify for, I can calculate each employee's salary that is up to 100,000. If somebody makes $1 million, I only can count the 100,000, so 900,000 of it is not countable. When I go to pay the employees, and I got a match that I paid out and spent 75% on employees, I can only again count each employee up to the $100,000 maximum. And therefore, anything that, if I pay the guy $1 million, then 900,000 of what I paid him doesn't count. So it's the same going in as it is going out. So it doesn't make a difference from that standpoint. I just don't get to count them on the initial loan, and I don't get to count them on the loan forgiveness part either. Only the first 100,000 of their income.
Okay, but I want to make sure with that clarification, you do get to count them, right?
Yes.
You get to count them for that 100.
Right, that's it. You get to count them, but you only count them for the 100.
Perfect. I'm going to open it up specifically on that particular issue, because as I said, that's one where I had heard the most amount of concern leading up to today. So if there's anyone on the line that had any questions specifically about the 100,000 or that 75-25 test, go ahead and unmute your mic, and I'll just recognize you based on that. All right, I don't see anybody jumping in, so hopefully we've clarified that. Go ahead.
Let me make just one other piece. Now again, this is not under the program, but what I did is my company is I turned around and I said, okay, I'm being super careful. I want to protect my company, and I want to protect our finances during this time. So the government's covering you. The government's going to cover you and pay for this. I'm going to match. So you're going to get, so I've taken salaries over $100,000 and put them on hold for the moment. And I'm having them pay all those people $100,000. Now they'll accrue the others, and we'll figure that out, later on. But at least during this time, when we're employed people without having income streams coming in, then I've sort of used the government's 100,000 tests and say, okay, I'm paying you guys, but I don't get to count you above that, so I'm not counting you in it in the mean between time either for regular
All
payroll.
right. All right. Thank you for that additional. Looks like we have a question. Mr. Head.
Thank you. Tom, just procedurally, we can't unmute ourselves. You as the host control that. So if somebody has a question, they need to raise their hand just as I did, and you'll see it, and you can unmute us individually. My question,
Go ahead.
My question is, as your slide references, the loans obviously go to payroll, mortgage, rent payments, utilities, but I've heard that there is some discussion, perhaps in the second round of financing, that some of the loan might be used for other than those purposes, i.e. vendors that support your facility. I don't know what that would be. It might be a cleaning crew. I guess it could be a landscape crew, other reoccurring expenses a business might have. Have you or Tim heard anything or have any knowledge of them expanding what those loans can be used for?
Tom, did you have Joe wants to say something. Can you unmute Joe? There you go.
I can indeed. Mr. English, did you have something you could share with us on that specifically?
So Tim has illustrated the lack of clarity that the original package put out. On April the 6th, the Treasury and the SBA came out with a position paper that has a Q&A type of style to answer a lot of those questions. That is something I just shared with Tim via email, so he has that as a resource. There are, on Terry's question, the concept of covered utilities is expanded to capture some of the items that he's brought forth. The only other comment that I'd like to parlay on Tim's payroll issue is the importance of the FTE count. We've been focusing a little bit on the payroll dollars.
Right.
But the
That's
FTE count is critical to the forgiveness piece. So
Can you go ahead and explain that?
So when you look at your payroll base for your 2.5 times test, that payroll base is going to have a full-time equivalent head count. To the extent you do not bring or pay that FTE head count, your forgiveness pool is reduced. So even if you, and let's use simply, you had 10 employees, you brought back 5. Of your qualified payroll for forgiveness, only 50% of that is now eligible for forgiveness because your FTE count has declined. And I'll make a comment about why I believe they did that. I think part of this was twofold. Employ people, keep them off unemployment, keep the money rolling to the families that need it. Secondly, create a program that is going to give small businesses a platform to reinvigorate the economy immediately after our crisis is over with. So they want you to keep your human talent in place. Even if it's a $40,000 cashier, that cashier knows their job and will be more readily capable of reinvigorating your business once the crisis is over with than going out and trying to find a new cashier. So I'd like that point to be emphasized. Why do they want you to pay them? 1, to get the money through the system to help families that need it. 2, put businesses in a position to be ready to shift into 5th gear and hit the ground running and grow our economy once this crisis is over with.
And I want to say he's totally right that that was probably the gist of it and the purpose and there is the secondary position, which is that full-time employee. So they, in the preceding year, the 6-month time frame, the January to June 30th, they want a full-time headcount and full-time employee headcount. And you are supposed to maintain that within 90% when you rehire or keep your people or rehire them back. Otherwise, you are somewhat diminished in terms of how much gets forgiven. However, there are a number of issues associated with that which I think is going to change some of that calculus. That is the basic premise of it. But I will tell you as well, though, and in talking with the bankers I had today, I said, listen, I did the count, my head count in June of 2019 to January 2019 to June 2019. And at that time, we had a big contract on. We had to hire bigger staff than we normally would anyways. And I have to use that. I couldn't use the reduced headcount one. I have to use that time period. But now I'd have to be hiring people who I don't even have, who let go on beforehand. And so what do you suspect on that? Now, the truth is, the devil's in the details, and there are scant details, and so it's not particularly well known or clear. So, but if you are going by what the rule says, that's, Joe identified it accurately, that that's what it's supposed to be.
Well, and thank you both for that. Joe English is a CPA and is a member of our board as well. So we're happy to have Joe's input on that as we've put these materials together on relatively short notice, doing what we can to be responsive to the questions that folks have identified. The idea of rent payments versus mortgage interest payments, both are allowable under the loan forgiveness, but it has raised the question for some as to the extent to which both might somehow be coverable. And I think as expressed to me, my looking into it, there is a possibility, depending on your business, where you could in fact have a rent obligation as well as a mortgage interest obligation. And there have not been, that I have seen and I'm aware of, any limitations expressed on the ability to use it for both. At least so that is in my line of work as legal counsel. That is advice that I have given out to this point, subject to the very limited information that has been forthcoming. We have not yet seen or heard any reason to believe, nor do you have to certify to the contrary, that you would not be looking to use the information, or sorry, the dollars for both of those. This covered utilities.
Have a multi-location business, Tom, with one facility being rented and one facility being owned. And I would agree with you that both would qualify for forgiveness subject to the 25% test of the total.
Thank you. Appreciate chiming in with that. In addition, this concept of covered utilities, as Joe English added, the definition of that is open to wide consideration to the extent the Treasury has decided to weigh in on this. In fact, I'll throw this out to you, Joe, if you don't mind. To what extent does there appear to be any limitation to the extent there is this sort of defined group, or at least exemplified group? Is there a place where a line appears reasonably drawn from what the Treasury seems to be saying?
I haven't seen enough clarity to be able to go out on a limb beyond the standard utility front, but there is enough that I believe we will see continuing guidance to clarify further. I'm really not in a position to extend it much beyond water, gas, electric, to include things such as cleaning and other types of fixed facility costs at this point, Tom. We just don't have enough clarity yet. It's coming.
But when you talk about these fixed facility costs, and that's I guess where I was headed, right? We talked about a cleaning crew coming in. Those aren't they're certainly not falling under payroll costs, right? So they're not your mortgage and rent. The utilities then that we're seeing from the guidance, as I understood it, and as you seem to be echoing, are really maintenance of the utility of the facilities themselves. So it's facility maintenance to the extent that you would say there's any guidance at all.
Correct, but I'm not in a position to say that that has been included in the utilities cost bucket as defined to date.
Understood.
If there is a place where it could be incorporated, covered utilities, quote unquote, would be the area where it could be eligible. And I think Terry's point was that there has been quite a bit of discussion and further guidance to come.
Appreciate that. Tim, to the extent the process itself has already run its full course for your business, are you able to share any guidance either from your specific dealings with your lender or beyond that as to what someone's expectations might be who either has an application out there currently or for those who we hope this proves to be of some assistance, are considering and taking the guidance to even submit an application?
He's muted, Tom.
Okay. So
Got it.
just in a general one, the first thing is, so the whole topic really is, we hear that, but in the loan documents itself, which is what I got this morning, and I went through them, there is very, very small stuff. It's just not much putting in there. But effectively what it says is, it says conduct of business. Borrower will carry on and conduct its principal business substantially as it is now being conducted. Maintain in good standing its existence and right to transact business in those states which it is now or after closing be doing business, and maintain all licenses, permits, registrations to conduct businesses where, except where the failure to maintain, yada, yada, yada. But basically, they want you to continue to keep your books and records going and continue to do stuff, but there is scant detail of exactly how things are going to be dealt with. One, get your loan in, get the money. I tell people, when the government says they're going to give out money, get in line first. 2, fill out the paperwork. 3, then try to adhere to as much as you can. But as Joe indicated, these terms and conditions and details are being changed all the time. The paperwork I signed was, the bank said they only got it days ago. And so, in terms of the exact paperwork they were supposed to use. So they haven't had a lot of work on that. But as far as is getting in, right now, fill out the forms you have, put your stuff in. I think there's going to be another set of forms. Maybe they're going to be varying with this next group. We don't know. We haven't seen it. We don't know what it's going to be asking for. So I'd be hard pressed to tell you until probably after 2 or 3 p.m. today what's included.
Exactly, Tim. The rumor is that Congress will allocate another potentially $400 billion to this program, and that I would encourage everyone to continue to apply, continue to build relationships with bankers who can assist you. I'd also caution our listeners to only apply once. There is an affidavit in the application that says that this is your only loan application outstanding. Don't get frustrated with one bank. If you do, notify that bank, pull my application, don't submit it if you decide to move on to a different bank.
Yep, that's good advice.
Clearly good advice, because you do not want to risk the loss of all of these funds and being found to have defrauded the program when in fact the only reason you decided you were going to try someplace else was because you weren't getting the type of responsiveness you wanted from your initial lender. And I think that is significant point that Tim, you brought up originally, which is if you have a banking relationship, and every business does to some extent a relationship with a bank, that's where you need to start. I think the real problem though is, what do you tell the individual who perhaps got shut out initially from that bank and might have been caught up in, say, the Wells Fargo situation where, hey, if you don't have a relationship with us, we're not going to, lend at all. What do you tell the folks whose applications, didn't get in? What do they do next? And I think what Joe's saying is, whatever relationship you had or have, obviously do your best to expand it. But if you need another lender, then now this may just be telling you it's time to consider opening up additional relationships. Any thoughts on that?
My first thought was in line with the question that I've had quite a few times. There have been some folks that thought they had relationships with community banks that were completely overwhelmed by this process and found out that they weren't capable of submitting an application. My recommendation to them was to send your lender an email. It says, please pull my application, tear it up. I'm not applying with your bank. Consider it void, and then explore other options. You need to have something in your quiver to say that I've only submitted one application.
Understood. And Tim, if you don't mind, I'm going to sort of play off of something you said, and I'm going to forward or extend this question to Joe. Tim's talked about just having gone through his application, just closed on the loan. It'll be funded shortly. And we know there is a certain requirement that how you will use the funds. But as Tim pointed out, as we sort of ran through very quickly, there's a certain verification part of it that is expected to be required. It may be very simplistic, but I've put up on the screen now the information and the documents needed based on the certifications that are there. There will be a requirement regarding verifying some certain numbers, verifying some dollar amounts, how you actually expended the money. What recommendations might you have from an accounting standpoint or from an accountant's standpoint about the best way to document these expenses? What will the banks really be looking for? What would they best be served with? If you're in a record keeping side of things, how simple or complicated should this be?
Well, from the payroll side of the house, let's start there. If you're utilizing a payroll service such as Paychex or ADP or Paylocity, all of them have created systems within their online portals to, first off, give you the data you need to apply, and secondly, give you the data that you need to keep to support your forgiveness. And it's my understanding that folks are submitting this information to the bank as these funds are being expended to document their forgiveness piece. Have you heard anything mechanically, Tim, that differs from that?
Yes. So in our bank, when we were talking about, the banker and our controller were working together. But originally what they were saying is the bankers had said what they like to do is set up a company that they're going to give the money to. They'll set them up a separate bank account. And then every time then when they would have payroll, they would submit the payroll application, they would transfer over that amount of the payroll back to your other account. And that way they could track it that way. And when I discussed it with our bank, the banker said, well, He goes, for you guys, no, you don't need to do that. He goes, but we have a lot of smaller ones or ones we're not familiar with as well. They don't have enough of the history, in which case we're just telling them it's a better practice for us. That way we can see that the work is being paid, or the money's being spent that way, and you verify each one back and forth. He goes, in your all's case, yeah, we trust you. We don't, it's not a big deal. But so there's two different approaches, but there is plenty of good reason just to do it through the payroll companies that are going to monitor that stuff anyways. So Joe's right.
So that's, both of those are consistent with what I've been hearing, both from clients and from the lender side, that it really is a sort of a practical application and a pragmatic approach on the lender's side for them, where they don't necessarily have 100% assurances yet that there wouldn't be some sort of liability or blowback, if you will, on them for having done something wrong on the front end. Practically, they are adapting in whatever way their particular bank has decided to adapt to this new frontier, this new type of loan that it really is being rolled out on an emergency basis with not a lot of guidance. And banks are going to handle it differently. You know, Tim described a process that worked for his banker, his banking relationship, based on the length of that relationship. And so depending on who you are and why you may need the funds and how well your existing relationship is with your bank, they may look to you to handle this separately, because there is some fear ultimately, because I've heard it from bankers that they're not 100% convinced yet, notwithstanding what they're hearing from the Treasury or from the regulators, that they shouldn't be as careful, or at least apply some of the same processes that they have always applied when it comes to loans of this type. So I think that is going to be a bank by bank situation that you'll face, depending on who you get when you walk in the door, what type of requirements might be expected of you as a small business, looking to give the assurances beyond certifications required in the loan. So I think you need to be prepared for that as you do go through this process. That initiating the process is very simplistic. The loan application itself, very straightforward, but how your given bank or banker expects your particular business to move from there, you're going to one of those time will tell, and that's really the only way you're going to know for sure, is by following it up. Well, we said we'd give you an hour. We are, notwithstanding our technical difficulties, the first couple minutes, we are coming up on the end of our hour. I do want to give one more opportunity in case anything we've said in the last few minutes has engendered any additional questions by those folks on the line. We've covered all the questions that had been forwarded to us in advance, those that we thought that might be of most interest. And obviously we've had some come up along the way, but want to reach out, thank certainly our former chairman, Tim Reiser of Item Inc., for being with us and being in a position to share your knowledge. Tim, thank you.
Mm-hmm.
And Joe English for stepping up. Joe, a member of our board and certified accountant, who obviously has had 100 reasons to stay as up to date as possible. Joe, thank you for stepping in as well. Thanks to all for your participation. Thank you for listening, for submitting your questions. Those of you who are members of the Chamber, South Fairfax Chamber of Commerce, thank you for your membership. We hope to be able to offer more programs like this on an as-needed basis going forward. Mr. Head, did you have something you wanted to add?
I was just curious, and first of all, well done. Congrats to everyone who was involved in putting the material and the information together. But was it by chance recorded where it could be posted on the Chamber's website, or at least the slides made available? on the Chamber's website?
I will certainly be able to make the slides available. We have recorded today's session. I have not yet had an opportunity to, I had hoped to test the recording quality, capability, and the sort of logistics, but it is our hope that, yes, today's presentation will hopefully be available online. But like I said, the materials themselves are certainly something that we'll be able to post.
Excellent.
I would expect we would look to supplement them as well with things that come up here in the next couple days. We'll hopefully be able to do that as well for you.
Excellent. Thank you.
Thank you all.
Thank you.
Take care, everybody.
Thank you. This concludes our presentation on the Payroll Protection Program. Thank you.